Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, filling in today for Karem Mermetlu. On the show with us is Marin Katusa, founder and publisher at Katusa Research, manager of the KCR Fund, and a New York Times best-selling author. Marin, you don't do many interviews, but you've been good enough to spend some time with us today to explore the state of junior resources. Thanks for joining us.
It's my pleasure, buddy.
In May of this year, you attended Palisade's second Jekyll Island conference with your wife and youngest child as a keynote speaker. I think more than most, you probably appreciated the deep history of Jekyll Island, which is, of course, the founding place of the Federal Reserve. At the club, there are mansions and summer estates, each bearing a plaque with the owner of that estate and their stories, names like Rockefeller, Aldrich, J.P. Morgan, William Vanderbilt. And you spent time to go around and read them all and enthusiastically shared with me various facts and stories. Before we get started, any takeaways from the conference or the venue itself?
Well, it's a beautiful venue. I think anyone in our sector and appreciation for the sound monetary system, it's something that you kind of got to do. For example, I would put it at the level of if you're an Elvis fan, you got to go to Graceland, right? It was really cool. And Colin, the only reason I did it was I believe in what you're doing. I thought it was a really eclectic group of individuals. Some are, out there, and other ones are fascinating. And then other guys that I've knew from 15, 16, 17 years ago that I reconnected. And to me, some of the highlights were, drinking that bottle of scotch with you right at the top of that whatever room I was in there, and that big staircase. And that was really fun. But what an amazing history. And I knew it was going to be a treat. So I rarely bring my wife along on these trips because we got 3 little ones at home. But she's got an MBA in finance and she's a geologist. So she had just as much fun as I did. So it was just fantastic.
Excellent. Well, for those interested in seeing Marin's full presentation, we do have that uploaded on Palisade Radio. We'll provide a link, and much of the discussion we have today will talk about the presentation and what has transpired since May. Marin, you kind of laid your theme out on gold being a real surprise to the market. Also, maybe a surprise to gold bugs is you think that the U.S. dollar, is going to remain strong over the next few years. And we'll kind of dive into a whole bunch of other things that you discussed. But maybe just start off with what your overall thesis was at the conference and what you've seen since then.
Well, it's wild. There's certain gold bugs that love my talk up until I say, and by the way, the U.S. dollar and gold are both going to go up. And people go, that's impossible. You can't, because, gold is priced in U.S. dollar. And I said, look, we're going to break all records. A year ago, I wrote about how we're going to crack $2,000 gold in Canada and Australia. People thought I was insane for saying that. Well, we're at 2,100 Australian dollars per ounce. And, what are we, 2060 Canadian per ounce? That's the all-time high, Colin. I laid that all out in my thesis. The reason why I'm strong on the U.S. dollar, and yes, I get how screwed up the U.S. is. I get the debt. I understand math is just as strong as anyone else in our markets. But you have to look at how screwed up the rest of the world's currencies are. Our mutual friend, Doug Casey, who's a very, very close friend of mine, I manage all his money in our fund. He's such a bull on Argentina when he started it, 15 years ago. And back then I always said, Doug, Argentina's where dreams go to die. And I was with him last week and he goes, boy, Marin, were you not kidding when you said that? You look at what's going on globally. If you're in Turkey, look at the Brazil and the Real, all-time highs in gold. If you're a producer in Brazil, this is like a cash cow. And I talked about that at the talk. And I also said, do not underestimate the power of the U.S. dollar. And we're seeing that right now. Because of the global debt structure, and I had a whole chapter of this in my book, I talked about how the U.S. dollar would be strong because things are priced in U.S. dollars. And right now, with the reversal of the petrodollar, there's actually a shortage of U.S. dollars globally. And I know that's hard for a lot of gold bugs to understand, but it's been a huge, huge call for me that has performed very well. And and the gold is going to continue to stay strong. Now, look, could it go down to 1400, 1420, 13? Of course, there's always pullbacks, there's volatility and everything. But if you pick the right stocks, like look, I walk through my one pick as a freebie to your audience for, because I love actionable advice. I'm not just a academic with theory. It's over doubled since that conference, and this is a great story that I think is going to even do higher. So I explained where I'm at. You have to be a contrarian. You don't need to own 50 junior stocks. I think that's insanity also. And be wary of these newsletter writers that don't have any skin in the game. I also talked about that. Like, would you ever invest in a management team that don't own their own stock? Like, come on, guys. It's everything in life's about Pareto's law and skin in the game. That's just the way it works.
Marin, that's a good segue into a question I have. You can be a sniper in this business, which I would say you are. You're very selective. You're picking just a couple stocks, or you can take a shotgun approach. I tend to agree with you that the sniper method makes a lot more sense. But you do have gold breaking out, and the TSX Venture, which you pointed out in your talk, is a proxy for junior resource stocks. It's almost making lows at this point, which is probably frustrating the average retail speculator listening to this interview. How is it possible that you're seeing such a lack of interest in most of the junior resource stocks right now?
Well, this was something I talked about at my conference, because most of these juniors that are listed on the venture don't actually even have any gold. They're looking for gold. It's a geologist with a box of crayons chasing, some theory and coloring on a map. And I'm being crude about it to really give people a visualization. And look, I have a huge amount of respect. My undergraduate degree, I did my geology courses. My partner was the head of the geology department, Dr. Mark Buston. I hired him to come work for me. My wife's a geologist. Many, many close friends of mine are geologists. But at the end of the day, people say how these promoters have done wealth destruction. No doubt, they have. But so many geologists, based off of their theories, have done massive wealth destruction. And for some reason, our industry thinks it's okay. Remember the maps that I talked about, the charts that I gave about how much discovery, and people are like, and then I said, well, look, there's been no tier 1 or tier 2 discoveries. And people say, well, and I said, the assumption is they're not exploring. Actually, last year they spent over $4 billion on exploration for gold, and the year before it was also $4 billion. So what's going on here? So I think the early stage investors, look at some of our stock picks like B2 Gold and Pan American. These things have had huge runs, because the big money that is playing it right now, they look at liquidity. These index funds that are these algos, these computers, absolute key is liquidity. And the problem with the juniors is, yes, they look at I can get in, but how do you get out? It's like checking into Hotel California. So the problem is our juniors don't have the liquidity to attract the money and capital that is needed, and yet they are so capital intensive. And Colin, people have to remember how small of a sector the whole gold sector is. If you take every single junior exploration gold company, mid-tier producer, major producer like Barrick and Newmont, and then add in the royalty companies like Franco and Wheaton and Sandstorm and Cisco, they're still smaller than Exxon, and Exxon is smaller than Apple. So like, you look at how small of a sector we are. This is a niche sector. Now, you said a very important thing. I'm a sniper. I'm an alligator. I wait. I build my big positions. I believe in warrants. I've talked about that in my talk. Versus a lot of people, and I'll say most newsletter writers, call it the basket or a shotgun approach. That works in a bull market. But you see, we're actually not in a bull market in juniors, because it's all about capital. And you got to follow the money. These juniors are not moving mainly because the capital that's coming in, it hasn't trickled down. Think of a tidal wave. That first tidal wave coming in is basically going to the mid-tiers and the big caps. They've done very well. And a very few selective juniors. And our space is, I like to be in the mid-tiers and in the juniors. And if you've picked right, sit tight, you're going to have a great run. But I also think that people haven't forgot 2017 or late 2016. Gold had a great window. The windows have become smaller and smaller for these juniors. And the reality is the mid-tiers and majors aren't buying these juniors. And I think the market, the big money, is waiting to see this happen, because And I talked about this a year and a half ago. Like, for example, the Commonwealth takeover, the Aussies are coming and buying out like the mid-tiers. And we've had 7 companies on our list bought out. And it's all about the appreciation. And the Australian stocks are trading at a higher value, relative speaking, than the North American listed companies. And they're being bought out. We're seeing it. The most recent one on our list was Atlantic by Stephen Dean's deal. Again, bought out by an Aussie. We're seeing it more and more. We're going to continue to see that. So I think that's where we are in the market. I don't see that changing even in the next 6 months. Even if I think we're in a consolidation period here for gold, I don't see it ripping to 1800. I think the market is going to digest where we are. We've had a huge move in the last 12 months in gold. It's been a great place to be. I'm not trimming back my positions just yet, but I'm not going to what you call the shotgun approach yet, because I just don't think we're there yet.
But certainly at some point, Marin, as these cycles always repeat, you'll see a point where money is going to rush in, that retail flow, and even if it hurts you to back maybe on a shotgun approach because you are backing these crayon geologists, there's money to be made there.
There is, but I think I've never done that approach, Colin, and my track record, the performance of my fund is one of the top in the sector for the last 13 years. And I've seen these guys, these bankers, using other people's money in this shotgun approach. It works when it's hot, but when that window closes, and this is what I really want to emphasize to people, that it used to be you'd have 2 or 3 years of leg running room. We're looking now at 5-6 months on these small windows. And I just don't think guys like you and I think your subscribers who are listening to this, they're much more into it than the average person. When it gets to that point where it's at that point where everything's going up, that's when you want to sell. And that's been my general trend. When, a geologist who's unblemished with success with a box of crayons that are all broken and tattered and he's never made a discovery in his life is being valued like he's going to make a discovery, that's the time that you sell your stock and go home and look for the next undervalued sector. That's my strategy.
Fair enough. So this next question is more an exercise of theory, but the mining sector in many ways is a joke. And I've heard, like Rick Rule say he plays in the sector because there is a low competition. But, the mining space in a way maybe is the way it is because it can't be scientific, whereas oil, it's so scientific at this point. They know where the oil is, they know how to hit it, and so it attracts, a scientific level of money and experience. Mining very much so. It's hard to find a new deposit. It is like a casino in a way. So, you and I both complain about it, but is it not that way just because that's how it has to be?
No. My theory is that I've never believed in peak oil or peak gold, because there's no shortage of gold. It's at what price are these pre-existing discovered deposits going to be economic? Look, Ross Beatty became a billionaire by buying out of the money copper projects that were drilled out. He drilled them out more. He defined them. He pushed it through the permitting cycle, but he sold 8 companies out of one company and made himself a billionaire. And literally 64 times your money if you stuck around for 7 years. Now, that didn't mean it went from, lower left to upper right on the chart in a linear fashion. It was very volatile, and you had a couple of major market shakeouts at that time. But that's where I think we're in the sector right now. So there's a lot of known gold deposits that can work at 1550 or 1600 that have been through a few owners and a few $100 million spent on the asset. And I think the market's got to digest that rather than now finding a new deposit in a new area with no infrastructure. Think of it as like a hotel. It's like the 4th owner of a hotel finally makes money on the hotel. That's kind of where we are in the resource sector. And one thing I've written about for over 10 years is, look at PEAs, preliminary economics assessments. I call it pretend economics, bankable feasibility studies. Who's written them? They give you in the chart who all the certified people are. I've created a database of every single publicly listed PEA, PFS, BFS, And, like a lot of people get, cranky about how I nickname these things like BFS, a bankable feasibility study. I call it bull fucking shit study, because the reality is it's not actually an independent third party person. The data that they're being used from is actually from the company. So the company is going to be very selective and has input on these things. And if you, just like geologists or athletes or, anything in life, Pareto's law, go and look at the track record of who signed off on the geology, on the metallurgy, on the infrastructure, the power costs in the bankable feasibility study. And if you look at, oh, geez, this guy had 6 disasters behind him, do you think now he's going to have a huge success on the next one? Probably not. There's a pattern to behavior and a pattern to success. And I just think that be very careful in your assumptions. And for example, a simple one that I wrote about 5 years ago that made no sense to me was, why are companies using an NPV5, so net present value, at a 5% discount when your cost of capital is going to be like 12%? Right? So right off the bat, these numbers are full of shit. So why would I screw around with this study? So you've got to know how to create your own model, understand the true cost of capital. And that's where I'm getting at, that, the regulators and the exchange and the investors have to start raising the bar. So I wouldn't say it's necessarily, that's the way the system is. A lot of it is because it was a hot potato game. Let's try to juice up our numbers to look as good as they can so someone else will buy it. But Colin, we've already gone through that system. The majors are stuck with so many write-downs, and they're still through the process of digesting these things, that they're going to realize that, before they go and buy the next one, they're going to really do their numbers. For example, a lot of people don't know that the executives in the 2011 bull run of some of the major gold companies, their bonus was based off of how many ounces of gold they brought in on the balance sheet. Now, how do you define ounces? Like, what type of ounces were these? There was one specifically I know of that an executive got a huge package bonus for bringing in 7 million ounces. Well, I was invited into the data room when they were trying to sell it, and I went through it, and I had a Canadian Hall of Famer geologist go through that project with me. And of that 7 million ounces, we expected that at $1,300 gold, maybe 720,000 ounces was economic. Okay? Talk about a serious write-down, Colin. So that's the kind of things that have had to work out of its system, that where I believe we're still, be careful of what you're buying. I've always been hesitant of that shotgun approach. And when it gets there, like, for example, everyone knows my track record of the 5-year warrants, and we list them and all these things. When the bankers start doing stupid deals, that's when you don't want to finance. Don't compete with stupidity.
Specific to your talk, Marin, I'm not going to go through all of the points because people can tune in and look at your talk on our channel, but I want to go over the 5 trends that you listed over the next 5 years, and then maybe you can pick 1 or 2 of them and speak to them. The first one was the unwinding of the petrodollar. The second one was uranium, which you stated was stuck in an echo phase, and that might last a few more years, but definitely interesting because uranium speculators are like gold bugs on steroids. The third one we talked about, or you talked about, is utility scale green energy. The fact that green energy is real, something a lot of mining people don't like to accept, and that vanadium is key, and Nevada in specific is like the Saudi Arabia of vanadium. The fourth one you went over was the Internet of Things, the fact that everything is going to be made smarter and tied to the internet. And the fifth one was innovation in the industry to solve bottlenecks, whether this is technological advancements or metallurgical breakthroughs. You name it, that's going to be a big major theme over the next few years. So I'll leave it to you to pick what you want to talk specifically about.
For sure. So we talked about the petrodollar unwinding, that's just happened, right? So that's bullish for the US dollar. The uranium one, I think, is really fascinating, Colin, because I got so much heat from the uranium speculators, investors going, but Marin, you're supposed to be bullish. Why do I need to be bullish? I'm one of the largest financiers in the uranium sector for the last decade. I've merged companies, I've created companies, I've funded them. And I just said, look, the reality is I've been asked to give the keynote at the World Nuclear Fuels Market. If you pull up, the largest producer in the world is a company called Kazatomprom in uranium. They quote me in their PowerPoint presentation. That's kind of like saying OPEC quotes you in your PowerPoint presentation. So clearly I've established myself in the sector. And I said, guys, we're in an echo. And this whole echo concept I've created is going to be my second book. And rather than, charging people, I said, I'll put it up on my website for free. I'm not in the business of selling books. So it's called Boom, Bust, and Echo. And I said, I've got this framework, and uranium's in the echo, and it's going to be there for a few years. So you don't need to buy anything that's risky in certain parts of the area, what I call AK-47 nations that need big capex costs. Not my game, because you can pick up royalties on them and you're going to be laughing in 5 years. So that's my strategy there. Now, where I put a huge amount of my money in the past was in this, the green energy revolution that our sector, Colin, like the resource guys, the investors, the gold bugs, they, for some reason, believe that green energy is bullshit. It is not. Now, in 2009, I called it the Great Green Bubble because everyone was rah, rah, rah. It was at a boom peak. Things were priced to perfection. And then in 2014, I started becoming, one of the largest investors in produced, built, cash flowing utility companies with like 500-600 megawatts of production. These are big, big projects. Now, why did that happen? Well, the cost to build these things, they've had their natural cycle. It did the boom, the bust, and the echo. So if you look at the solar panels, the cost reduced by about 90%. If you look at the windmills, also, they started getting much bigger. They were able to improve the efficiency. So things started happening. And the big next game changer in the green energy sectors, utility size scale energy. And if you get into the details, there was the great AC/DC war between Nikola Tesla and Thomas and Edison. The irony of all this is that Edison, when it comes to these utility scale things, is going to be proven right. But if you're doing the old way of, a giant nuclear energy plant or a Niagara Falls and you want to transmit it from afar, far away, you need Tesla's alternating current. But what I think is going to happen is, if you look at the technology that's coming out, vanadium is the dark horse on this. And I don't need to go anywhere outside of Nevada because, like you mentioned, it's the Saudi Arabia of vanadium. And again, you got infrastructure, you got power, and these are the big, big, big costs. Like, a lot of people are shocked to hear that for a conventional porphyry copper project, just the cost of power to crush the rock makes up about 25% of the costs of your production to produce your copper. So if you have, existing infrastructure and cheap power, these things help benefit. And more importantly, Colin, after traveling to 100 countries and looking for gold in the middle of a jungle, it sounds cool. The reality is it rarely works. Stick to the rule of law. And the reality is Nevada, in my opinion, is one of the best places to invest, to actually develop and build a mine. Now, that's also, if you're a big battery manufacturer, do you want to deal with a dictator or some area that has intermittent power or major infrastructure risks or political instability? Hell no. You just want a source of long, secure production. And Nevada does that. And full, like, look, I'm not getting paid by your company. I'm not getting paid in any way. I invested a lot of money in what you're doing. But I think Victory Metals, you got Paul Matysek. Look at his past. I've known Paul, 17, 18 years. Before I even invested in this deal, him and I have battered heads on other deals where I couldn't structure the deal. And we couldn't come to terms. I'd make an offer and he wanted it higher. I've invested in other deals of his where I made a killing, like 22 times my money with Paul. Paul is a very close friend, but more importantly, I think if you're looking at someone as a industry leader, the guy is a legend. There's very, very few people who have built and sold as many companies as he has. More importantly, his true sweet spot are in these niche metals. What he did with EMC metals, what he did with potash, what he did with lithium 1, then lithium X, which he rarely gets credit for, but he was the real force. And then his gold deal. These are truly niche markets. And I don't think there's anyone better in the sector. And, Colin, before he teamed up with you, we did our due diligence on you. And all of us sat there and said, we think Colin has the ability to be part of the next generation of superstars. And, if you don't mind me sharing some of your past, I knew your dad before I knew you. And I think you're able to see the mistakes. You have the benefit of growing up in a resource entrepreneur household and seeing the good times and how bad the bad times get. So you grew up with it. With the geological team that you and Paul have put together, the asset base, and then you get that warrant. I call it, the gold kicker. This is massive, and there's just, why would I want to speculate on a niche metal with any other management team than the guys who are doing this? Paul and his guys, Doug Forrester. Doug Forrester, the first meeting he ever had when he created Newmarket, which took Fosterville, which everybody's talking about today, was about 4.5 years ago. I went and bought 10% of his company because I believed, and it was the first report I ever published as Katusa Research, was I just bought 10% of this company. I think that this asset's going to get to like 3, 4, 500,000 ounces of gold. People mocked it. People thought Doug was crazy. They thought I was crazy. You know what, we were crazy? We underestimated how good. It created Kirkland Lake, which went from basically $1.50 to over $60 a share. That was because of Fosterville, which Doug Forrester was the force behind getting and buying from Crocodile Gold. The guys that you haven't, like Colin, I'm just telling you straight up, and I told you this when we were drinking scotch outside of my patio in that room that day, you have an opportunity to learn from some of the best speculators, entrepreneurs, true innovators in our business. Like, this is an incredible opportunity for you, and I believe you're going to take it for the best, but this is also a test for you, and I believe you're going to do it, and it's why I bought millions of shares of your company, because I believe in it.
Well, much appreciated on that, Marin, and we've got a few minutes left. I find that my preferred and favorite way to learn in history is to kind of have a biographical review, whether that's reading books or documentaries. I find it's a very interesting way to learn about somebody and their success. And I was talking to our mutual friend Phil O'Neill, a few days ago, and he said, "Man, I remember back in 2005, Marin." Or maybe it's 2004, Marin was in the audience of one of these conferences and standing up and asking, all the right questions. And it just begs the question, how did you end up finding this space? How did you get into the space? And it's amazing how quickly, somebody can make it in this space and forge, a path like you have.
Well, it's funny that a lot of people think it was quickly. It's kind of like saying, you're an overnight success. It just took you 15 years to get there. Look, doing geology. So let me just pull back a bit. I got an academic scholarship to go to UBC. And at the time, it was a Science One scholarship. It was $10,000. Doesn't sound like a lot of money back then, but today, but it wasn't back then. It paid enough for all my books, and every semester I'd get a check for 600 and change cash that I'd go buy a pair of cowboy boots and a guitar every semester and go party with my buddies. It was a great time in my life. And I loved the geology courses. And it was actually Dr. Mark Buston in 1999 that was like, "Marin, like there's no jobs. Like, you're really good at math. That's your major." I did a double math and chem. And he goes, the geology, like, there's no work. And that year, I think there was like 6 people that graduated from the geology department, and there was 8 that graduated from the math department. But all of us were offered jobs like a year before we graduated in the math department, because math is so key, and computer programming at the time was the bull market. And so I kind of sat there and went, "Wow, okay, but this is really interesting stuff." So being in Vancouver, I just had that advantage. So I started out as a high school math teacher. Then I got in the Ministry of Education marking provincial exams. Then I started teaching the calculus courses in these review sessions. And I met some interesting folk at the time. And one of these twin brothers, a guy named Jim Robertson, he was an engineer of a tungsten company. And because his kids would tell their dad, this kind of wacky math prof is teaching them different ways, and I'd always use resource pit optimization to make calculus fun. And Jimmy sent these questions to me, and we ended up becoming friends. And it was probably the first ever private placement I did. I took a $180,000 line of credit on my house at the time. I do not recommend that to people. I was crazy, but I was young and I was aggressive. And it wasn't like I just spent a month on the research. Like, Colin, I think my style enough. I'm borderline OCD. I spent about 8 months studying tungsten. I was published by research firms, and they would take my stuff and not use my name. Other newsletter writers would take my stuff at the time and not use my name. I had no idea of the newsletter industry at the time. I didn't even know what the hell it was. I didn't even know who Doug Casey was or Rick Rule. So I'd go to these like mining conferences, and I'd look at these guys, and the questions that I had, I would just ask them in the audience. And that's when about one guy named Paul Van Eden took notice of me, and we started emailing back and forth. And then he introduced me to his brother-in-law, which at the time I had no idea. And this is how small our sector is, that it's Doug Casey. Doug married Paul's older sister, Anja. And then I met Doug, and Doug was like, hey, I'd love for you to come work for me. But at that time, I had an idea, and I staked up 13% of Kosovo. And I had this whole vision. That's when you met Miles Thompson, which became today Nevsun's big Timok deposit. But back then, it was just a crazy idea in Serbia. And then a real key guy was a guy named Jim O'Rourke. I came across doing all this research, and I became very bullish on copper. And Jim O'Rourke was starting to put together a company called Copper Mountain, which I became the largest investor in and a founding director. And then with Dr. Mark Buston in 2005 and 6, we had the idea for shale in Europe. So we created the first shale company called Quadrilla. So I bet big early onto trends. And, that's kind of, I remember Phil and so many people thought I was crazy trying to put a copper mine into production. But, that stock went from 25 cents to $8, and it's the third largest producer in the country today. So a lot of hard work, a lot of mistakes, Colin. That's where you kind of learn. The greatest way to learn is by doing, traveling to over 100 countries. And yes, it's taken a toll on my body, and, a couple times near-death experiences. But you got to love what you do. And that was the absolute key, Colin. Like when it was down and out, I never let the market dictate my psychology. I always let my psychology dictate my actions in the market. And that, I guess, was the key to my style, to be a true contrarian. For example, everyone in uranium, I've been in the uranium sector since 2004 or 3. And that's where I met guys like Phil and Rick and all these guys. And Rick became my partner, Rick Rule. Everyone in uranium is like, it's cheap. And I said, yes, you're right, it is cheap. But we're in an echo, and it can get cheaper, and it can stay cheaper for longer. That was my thesis for 3 years. And that's why I created a company called Uranium Royalty Corp. So if that's my reality, and I've done, I think, just as much research or more than most of the gurus in the space, and I'm betting way bigger amounts of capital than these gurus, well, let's create this royalty company. And I believe we're an echo for uranium. It's proved out that that's where we're at. Pick up royalties on the best assets. And in 5 years, the success of Franco-Nevada wasn't buying royalties at $1,200 gold. It was buying gold at royalties at $400 an ounce. That's what we're doing in that space. So that's an example of being a true contrarian. And, everyone likes the thought of being a contrarian, Colin, up until it's time to be a contrarian. I share the example of Northern Dynasty, where everybody loved the stock when it was $25 a share. But when it got to 40 cents a share, nobody wanted to touch it. So I put 43 million in, restructured it, got a full 5-year warrant, and that was 18 times our money in less than 18 months. Now that's a true contrarian call. But the research that went behind it was going to site with David Lowell, who's probably the greatest living geologist on porphyry deposits on the planet, undisputed. You can ask anyone about that. And doing the research that, I spent 8 months of my life on that project and became probably the largest individual shareholder of the company. Those are the bets you've got to make, and you do it because you love it. If you're looking for a quick hit, the resource sector is not the place. It's going to test your testicular fortitude. It's going to test your psychology. It's going to test all sorts of factors. So I just love the sector, and the characters you meet in this industry, whether it's a guy like Paul Matysek or Doug Casey or Rick Rule, watching someone like yourself. You're still in the early stages of your career. I'm lucky enough I'm touching my second, 20 years in the sector. I've watched guys develop their careers. I've watched stars blow up. I've watched divorces where, at the top of the market, the wife takes all the tangible assets like real estate, and the husband takes the paper, and the paper goes down 95%. I'm lucky enough to have seen the sector. So now, being one of the more experienced guys with one of the largest funds in the sector, I'm just kind of playing a sniper role, only investing in fantastic people that I believe have great potential. And Colin, this isn't going to be your last deal. You're going to make a successive victory. It's not going to be a linear home run out of the base. It's going to be up and down and really, really up. And then you're going to sell the company. and then you're going to do something else. And my goal is to just back the best people in the business, like the Amir Adanis, the Nolan Watsons, look what we did with Equinox Gold, backing guys like Greg and Christian, and then Ross came in. But, Ross wasn't there from day one. I'm the one that introduced it to Ross. And then when he saw the value, he's invested $170 million into the deal. Those are the ways that you find just good people will find great assets. Let them develop these assets and you will do very, very well.
Well, Marin, look, we're out of time here. I want to thank you for your time and for all the kind words and support of Victory Metals and everything that we're working on over here. And hopefully a few months down the road, we get you back on the show again.
Fantastic. Take care of yourself, Colin.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?